Hello everyone, welcome back. Patrick here. Well, finally they announced the merger between Lucid Motors and Churchill Capital for CCIV. So a lot of you are in a state of shock right now with the share price going from the high 50s all the way down to the low 30s today for a little period. So what are we going to be doing now? Some of you have been buying this stock since it was very cheap, and probably some of you have bought in at the peak. So now we have to figure out what are we going to do in the next few weeks and next few months with this stock. So that's what this video is going to be about. I'm not going to do a full review of the company like I usually do because I'm assuming that you know what Lucid Air does. I'll go over like the really big highlights that I see for the company, but after that it's going to be about how do we trade this short term or long term. So let's get started, but please like and subscribe, it really helps out. Alright guys, so let's start with the basics, which is going to be the valuation. There's been a lot of confusion with this. So the way to calculate this is always the same with every SPAC, right? There's been a lot of different numbers thrown around. 12 billion, 16 billion, 24 billion. It's always the same. You want to take the number of shares after the merger, so 1,599,700,000. You multiply that by the current share price. So right now the market's open, so it keeps fluctuating, but when I did it was around $36. And then you subtract the money that they're going to have in their bank account after the transaction, which is going to be 4,405,000,000, and you get a valuation right now, as of me filming this, of around 52.6 billion. All right, so everyone knew that this company was going to be valued extremely high, especially when it went from $10 to $60 on rumors, right? So there was nothing hidden, there's no bait and switch. Now, what confused people is the 12 billion that they were reporting in the Bloomberg article. So this, you would take the 1.6 billion shares times 10, so that's 16 billion. You subtract the 4.4 and you get 11.6. And then with the pipe at $15 and the $24 billion valuation, you do 1.6 billions times 10, that's the 16, and then you add 50% on top of that, you get to the 24 billion. So Bloomberg was actually extremely accurate in the reporting of these rumors, so kudos to them, and we'll have to keep track of that in the future. Now, the money that they are getting is 2.07 billion from the SPAC and then 2.5 billion from the pipe. They're expected to close in the second quarter of 2021. And then another very important detail that we learned is that they're not going to be doing their deliveries in the second quarter like they were supposed to. They're going to start delivering in the second half of 2021. So that is a big difference. Like, that threw off a lot of people, including myself, right? When they backtrack on something like that, that's just more delays. And what else are they hiding? We don't really know. But what we do know is that 52.6 billion is extremely expensive, right? So as usual, people have bought in early. I've talked to several people that have bought in the six figures of this stock, but they're into it since $10, between $10 and $20. I bought warrants when they were at $8, and then I sold them when they were in the high teens. So all these people, they're still ahead by more than 100%, right? Everything's great. The problem is always the same. It's people that FOMO and follow that echo chamber that the SPAC can only go up, and then they buy at 60, and now all of a sudden, valuation doesn't matter. All of a sudden, now they're down by 40% overnight. So keep that in mind, right? Most people are doing great with the stock still. But we have to understand that they are going to be burning through so much cash over the next few years. I mean, this is not Tesla. Tesla is already delivering vehicles and they're starting to generate profits now. Not Lucid. Lucid is still at that beginning stage now where they are going to be starting the production. So look at these numbers. Yeah, over time they're going to increase their income, right? They're going to get some revenues, but look at their free cash flow. They're going to burn through 2.3 billion this year, 2.7 next year, and then 3.2 in 2023. Finally, in 2024, if everything goes according to plan, they are going to have that inflection point where the curve changes direction, and they're going to start to lose less and less cash until finally they're going to be cash flow positive in 2025, where apparently they would make 321 million. Then finally in 2026, they could get to 1.5 billion. So that is when the production is ramped up, right? They want to go from about 35,000 vehicles to hundreds of thousands of vehicles in their factory in Arizona. So that's the plan for the next few years. Let's make something very, very clear. Everything that you liked about this company before, everything that you hoped it was going to be, has been confirmed with this announcement. So this is great news. The only difference between yesterday and today is the share price, and now we finally have data on the valuation. But this company is as close as you can get to Tesla 2.0, for those of you that have been chasing the next Tesla for several years. So it's the same as Tesla, except several years back before they mass-produced their cars. One of the main things that I like about the company is the performance of their technology. So I'm going to go through very quickly some of the highlights of what we learned yesterday, right? But I was personally impressed. So we have the actual performance of the battery is very good. They managed to optimize everything about the car to get 4.5 miles per kilowatt, which is very competitive with Tesla currently. Of course, they're going to keep improving with every model, but for now, both of them are within like 10% of each other. So they're very competitive and much, much more optimized than some of their other luxury competitors, such as Audi and Porsche at 2.4 and 2.3. So that's almost double, and that's why the battery range, right, is going to be over 500 for their most luxurious edition of their product versus 227 for the Taycan, which is brand new, and the Audi e-tron at 222. So the performance is going to be very competitive. Then you have the fact that the company has that skateboard that they're going to be able to build any type of model that they want on top of it. So you have this one, the Project Gravity in 2023, that looks like a hatchback. Eventually, I'm sure they'll come up with an SUV. They can build almost anything with this skateboard, right? And the company does everything in-house. So they have extremely high expertise in all aspects of building these vehicles. They don't really depend on anyone else, except for maybe the battery cells. I'm not quite sure. But the company has a lot to offer. And another great thing about it is that, yes, the valuation is sky high. Like 52 billion is crazy high in my opinion. But if it was just a car manufacturer, that would not be enough, in my opinion. But they understood the Tesla model of being an energy company first and then a car maker second. And so that's why they specifically added in the presentation these pages that tell you like what else they can do with their technology, which was built from the ground up. So they can do the energy storage system, and then they can adapt their technology for a lot of different OEM projects. So you have the vertical takeoff, whatever the thing is, military application, heavy machinery, agriculture, marine. So you can do all sorts of different things with their technology. And that's why the company wants to position themselves as an energy company, and then after that as a car maker. So once you understand that, it kind of helps you justify those crazy valuations. All right, guys, in the wrap up, we have to look at this company as an investment. How can we rationally make profits with this company short-term and long-term? Please ignore the FOMO, ignore the hype. Those are not real investors. They're just going to be losing money in the stock market. I drew a line on the chart for you guys. You can see a nice steady progression for the share price over the past month. Now, you have all sorts of buyers here. You have people that bought in to hold long-term. You have people that bought in to trade in and out, sell at the merger announcement, sell at the merger. You have all sorts of buyers, but what matters is that it had a nice steady progression of buyers over the past month, and you can kind of rationalize it because look at how between 30 and 40, well, those are prices that we've seen with other SPACs before. Like there's plenty that have been in that price range. And also, if we look at the rumors from Bloomberg, they had the merger at 15 billion valuation. Well, this would have given the company a valuation based on the rumors of 45 to 60 billion. So, of course, very expensive. But still, if you compare it with Tesla, that at the time was at 800 billion, again, you can kind of rationalize it. Now, what did not make sense? Look at this huge anomaly on the chart. This, in my opinion, is the momentum chasers. the FOMO crowd, the hype crowd. The people that keep saying stuff like valuations don't matter, fundamentals don't matter, it's all about the hype. You know, all of that stuff you've probably seen on forums. They're always talking about buying, doesn't matter the price. They'll buy a $20 stock for $350, hoping it goes to $1,000, or in this case, at $64, hoping it goes to $100, on rumors without knowing the valuation. Those are not the type of investors that you need to listen to, right? You have to make your own opinion and own strategy. So we have the rumors that are now like a real announcement. The merger is going through. We fall off a cliff. Where do we land? Right on top of this line that we just drew for the past month. Is this, in your opinion, coincidence or not? I don't think it is, right? It just makes sense. We follow the same logic from the past month. This is the first wave of soldiers that just died on the battlefield. My opinion is that over the next few days, they will be replaced by a second wave of soldiers, which a lot of us have been priced out of this stock over the past month. Right, so I initially bought warrants right down here, but no one really knew that this was ever going to go to $40. So most people sold before that. I took profits like most of you probably did, right, if you're smart. But now I wasn't going to buy back into the stock at $60, right? So what's going to happen is you have a lot of people that got priced out that are now going to re-enter the stock. Now that we have real data, we know what the company is worth, we know like what they have in the pipeline and all of that. Now you're going to see a new generation of buyers into the stock. And where is it going to land? It's kind of hard to say. They're going to be $35, $40, $30. I can't say precisely. We're going to find that out in the next week or two. Personally, I feel like right now I bought some warrants to convert into shares eventually. I'm going to exercise them and I'm going to hold them long term, because at $19 or whatever I bought it for, if you add $11.50, that gives us a price, like the break-even price for these warrants, of $30.50, which, given this company, right, I feel is very reasonable, even with the $52 billion valuation. The reason why is, even though I feel like I'm more of a value, fundamentals-based investor, every once in a while, there is a company that's going to transcend the SPACs. You guys know that I like IPOE. When the company merges and faces like a lot of competition in the stock market, there's thousands of stocks in the stock market, it's going to be different from the other ones. It's going to have something that sets it apart. Well, same for Churchill Capital 4 when it becomes Lucid. Like, people are still going to care about this company in 6 months and a year. But there are some other SPACs where like they're going to be lost in the shuffle with the thousands of other companies. I don't think that's what's going to happen with Lucid when they merge. So that's why, like, even though the share price is very expensive, the valuation is very expensive, I do think that there's still meat on the bone, and like it's going to be a long hold, of course, but that's like people that bought Tesla at $150 or $200. It didn't go up instantly. It took a long time for the company to actually mature and ramp up production and start selling. But these guys had the real diamond hands, right? They saw the future, they bought in, they were patient. I feel like this is the type of stock that is already fairly expensive, but you want to just put it in the drawer, come back to it 5 years from now and assess it then. If we look at the valuation for NIO, it's at $76 billion right now. Tesla, when I was filming this, was at $670 billion, and that kind of dropped over the past couple of weeks. At some point was $800 billion. So if you do the math right now, Churchill Capital 4/Lucid is worth 7.8% of Tesla's valuation. Is that too much? Is that too little? Well, of course, value is going to be relative. For some people, like, it should be 5%. For some people, it might be 10%. Some people I've talked to, as I mentioned, that bought 6 figures worth of this company, feel like it's worth about $75 billion, so 10% of Tesla at the time. Well, in that case, $36 is cheap, right? There's a lot of room left to go. The share price should be more in line of $50 for this stock. So with all of those factored in, I don't think that there's going to be a big retracement on this stock anymore, right? Because if the share price for some reason goes down to 25, there is going to be a lot of big players coming in, opening their position and scooping up those shares and warrants. I'm a small fry, small investor, but if it drops to 25, I'll be more than happy to dollar cost average down. And I'm pretty sure a lot of you guys would also double down if the share price keeps going back down. Now we finally know what we're getting with this company, and everyone is very excited about Lucid. Eventually, it's going to become one of those meme stocks that, like Tesla, always goes up, and people are going to become millionaires from it. Now, like, we don't live in hype land, but still, we have to be realistic. I mean, look at the momentum the stock has had. Let me know in the comments if you guys have been scared off from this. Did you sell or did you hold steady? I hope most of you held. I think it's going to go back up between now and the merger. We might see some periods where it's going to go down, but every time it goes down, there's going to be more buyers. So let me know what you do. I hope you enjoyed the video. I'll see you in the next one.